So we know that Trump has consistently claimed, and we've heard people, that support him as well, consistently claim that, the economy is amazing, right? That Trump built an amazing economy. And I'm going to be as fair as possible, right? And when I say that, I mean, I'm going to give him every benefit of the doubt, right? In these claims. I'm only going to be talking about the economy pre-pandemic, right? So I'm not even going to talk about the economy since then. I'm just going to say, for the sake of argument, let's assume that none of that is his responsibility, right? Which nobody did for his predecessor when it came to the recession that he inherited. However, let's look at it that way and let's understand this claim, right? So the main source I'm going to be looking at on top of that, because I do think it's really important to look specifically at sources that disagree with you, right? Or that have every reason to disagree with you. I.e., if I want to measure the validity of a claim, then I'm going to want to see, okay, are there studies that have every reason to disagree with me? And am I still going to be able to look at that and see that it supports, my perspective? And so I'm going to be looking at the Cato Institute. All these links are going to be in the description box below. I'm going to be looking at the Cato Institute, which is a libertarian / conservative leaning, think tank essentially. But they have some good economic analysis stuff. So it's pretty accurate, generally speaking, their opinion, give or take. So what we're going to look at first of all is GDP. So when we're looking, GDP is something that is basically you're looking at, okay, how much is an economy producing, right? What's its gross domestic product? So how productive is it, right? And what we want to see is, okay, this is of course the recession, right? So GDP contracted quite a bit. And then we're looking at, okay, over time, this is from here to here, right? Is going to be Obama's presidency. And then from here on is going to be Trump's presidency. And we want to look, okay, what is the difference in GDP growth, right? And so it's very important to understand that when Trump was campaigning, that he was consistently talking about Obama having, GDP growth that was way too low, which U.S. GDP growth has been low for the past about 30 years. It's been about 2 to 3%, right? And which in comparison, right, like China has been growing at about 6 to 8% a year GDP. Even this year, even with COVID, China grew 4% in GDP this year. So really opens up perspective. Under Obama, when we're looking at, say, first 3 years versus first 3 years, Obama saw GDP growth about 2.4% a year. Trump has seen it at about 2.5% a year. It's about the same, right? Doesn't really matter. And we can also look at the way those are calculated because based on the way that spending works with the government, there are people that would suggest that adjusted, they are basically exactly the same, but let's just call 2.4, 2.5, potato. It's about the same, right? Now, the other thing to keep in mind is this extremely small benefit, right? Or this extremely small accelerant of the economy came with a very high increase in the deficit. The highest increase, Obama definitely increased the deficit a lot. However, that was during a recession. The highest increase in the deficit in a non-recession ever under Trump, right? The reason, now there are people that will argue that doesn't matter. I am actually one of them. However, if you're a deficit hawk, you have to be consistent and be, calling it out when it happens under both people. And there are some that do. Peter Schiff, who I basically disagree with on everything. Peter Schiff is one person that's actually pretty consistent about this. So props to him on that at least. But basically the issue you had is that Trump, of course, made the 2017 tax cuts. And when we're looking at the 2017 tax cuts, we want to see is what did those do, right? Because the problem you had was that they cut government funding, right? at the same time as spending went up still. So that increased the deficit, right? Now, also, when we're looking at who those tax cuts benefited, they didn't really benefit the average person very much. They mostly benefited people making over $200,000 per year, not people that are average, right? Important to remember. Now, when we're looking at job growth, right? Because that's another thing that Trump definitely hammered Obama with, was that, you aren't growing jobs fast enough. We need to be able to grow them faster. I'm going to bring all the jobs back, right? The problem is it just doesn't happen. Job growth slipped from depending on the numbers you're looking at. This is from the Joint Economic Committee in the Senate. Depending on numbers, it's about 227 or 217 under Obama thousand per month job growth, and it's about 191 to 189 per month under Trump. So we're looking at about 30 to 40,000 less job growth per month under Trump. Now, it's still good. There's nothing that's not bad. It's just there's just no reason to lie about it. It's good. It's just it didn't improve that much under Obama. It didn't improve that much from when it was under Obama. And that's the thing to keep in mind here, because that was the claim that was made, and it's still being made. Now, also, when we're looking at Obama's last 3 years, so I'm not comparing Obama's first 3 years, which would be unfair to compare from the bottom of a recession to normal economic growth. I'm comparing his last 3 years versus Trump's first 3 years. So they run right into each other, and they contain the tax cuts from 2017. Obama saw 8.1 million jobs, new jobs come, and Trump's only seen 6.55. Remember, this is pre-pandemic. Something to keep in mind. So when we're talking about the jobs come back, I don't really know about that. Doesn't seem like it to me. Now, when we're looking at unemployment rate, because unemployment is something that people talk about constantly. You hear about record low unemployment for, African Americans or Latinos, and this, of course, pre-pandemic, because it is much higher than this now. But when we're looking, let's say, okay, well, what is the cause, right? Because when a politician or anyone really makes a claim, we need to not necessarily worry about, well, is the thing that they're saying true, but we need to understand why is it true, especially when it has to do with public policy. We need to be questioning, okay, what specific policies produce the desired outcomes? And can that be attributed to a specific person, movement, whatever? And when we're looking, we can see that we're following the slope of this line, right? We can see that unemployment rates have dropped pretty steadily since 2010. There's not really a change. It's actually leveled off a little bit under Trump, but there's not a whole lot more you can ask on this, in my opinion. This is pretty good within our current system. This is pretty good, right? Again, nothing to be ashamed of. And then if you want to look as here's another example of the same thing with a little bit more of a detailed breakdown. And as you can see, again, it's about the same, right? The difference is that Obama actually, in his second term, right? So again, his last 3 versus Trump's first 3 years, unemployment dropped from 6.2 to 4.9% under Obama's second term, right? Under Trump, it dropped from 4.4 to 3.7. That's half as steep of a drop. It just hasn't. So the main thing to keep there in mind is whenever people talk about the 2017 tax cuts are going to pay for themselves because they're going to, encourage companies to hire more people. They didn't. They cut corporate taxes by about 40%, right? Total corporate tax revenue in the United States by about 40%, and increased jobs by 0.7%. That's a terrible trade. That's a terrible trade for the average working class person, that's for sure. The only people that are benefiting from that are the people that own the businesses, not the average person. And that's a pretty important thing to keep in mind. Now, another really key thing to keep in mind is, okay, well, it's still good, and it is, that it's still good though that, unemployment rate is low, and unemployment rate is, historically low, was historically low for, Latinos, African Americans, this group, that group. The other problem you have is that what type of jobs? And that matters, because when you're looking at how unemployment rate is calculated, you have to ask, what does it mean to be, a person that's employed? And when we're looking, the problem is that real wages dropped under Trump. So yes, jobs got added, not good ones. Jobs that were lower paying got added. As you can see, and fair, it was already dropping under Obama. No question. However, just not. It wasn't. And then on top of that, what you see is the percent change, right? And you see, okay, well, there was a big move there, right? Right here, from 2018 through the end to beginning of 2019. The problem is that is based off of the historically low federal interest rates, right? Where we've been hovering close to, hit basically between 2 and 0% every year during Trump's administration. And that, influences people to, hire, but it hurts people that are saving money. So the question is, okay, well, is the juice worth the squeeze there? Not really. And now let's keep in mind that whether it was Obama or Trump, we still haven't approached what real wages were 10 years ago. Not to even mention that we're nowhere close to what wages were even several decades ago. So it's not really making the economy great. It's basically been as good as it was under Obama, and at times worse, which is fair. That's not, I don't expect a president to change an entire economy. That's not what presidents do, right? But we need to be honest about what has happened and what policies affected that. Also, when we're looking at real median household income, it's been about the same. It's actually leveled off a bit since coming into Trump. So, okay, cool. It's still going up. Still about the same, though, at the same rate. No new trend. Nothing really has changed, which is the main takeaway from it. Next part is the stock market. This is another thing that Trump has talked about constantly. And first of all, the stock market is not the economy. I did a video on this as well. Check it out. But the stock market, when people talk about the stock market's up, so that means the economy is good, this is a fundamental misunderstanding of what the stock market measures. The stock market measures investor sentiment. It does not measure how the economy is doing overall for the average person. I.e., if the stock market's up, yes, those who own stocks, i.e., about half of Americans, are doing better. However, the other half are not benefiting from it. So it's not a measure of the economy. You can have half the members of the United States doing much poorer. The stock market's still doing good, especially when you have very low interest rates. So money's very cheap to borrow, and you have tax cuts that allow companies to then roll more revenue back into stock buybacks or into other investments. Yeah, it can look good. That doesn't mean anything for the economy. It's not the same thing. However, let's assume his premise. Let's assume that the stock market is a good indication of the economy doing well. Well, the reality is that we're looking at, 2013. So we're talking, or even before that, but when we're looking at the last 3 years of Obama, it's basically the same. The only difference is we've had big spike, big crash, big spike, big crash. It's just been a little bit more jagged. We had the 2 right here with Obama, nowhere near as deep, obviously, but that's not necessarily Trump or Obama's responsibility. But the point is that overall, they've grown about the same. And on top of that, we keep in mind that allowing businesses to keep more money through the 2017 tax cuts, most of the big S&P 500 businesses use that money to then buy their own shares of stock, i.e. elevate their own stock prices, which just pushes their stock up because oftentimes CEOs and other executives are compensated through stock options. It doesn't mean anything. It's fake growth. It's just not. So we're talking about, the reality is the stock market is not going to go, it's not going to depart that much from the GDP. You would expect it to not grow very fast because we've had a very low growth environment for the last several decades in the United States. So what's the takeaway? Well, overall, Trump has not done much to improve the economy that he inherited from Obama. Like I said, that's not necessarily a knock on him because the economy was already looking good from the metrics that, we've been talking about in this video. And keep in mind, I'm comparing to what they were when Obama inherited them as well, which was a complete disaster during the financial crisis. Not saying that it's good because there are a lot of issues with America's economy and with how the average person, benefits or even, oftentimes doesn't benefit from it. But the point is that it's important to look at the numbers and to pressure test the lofty claims that Trump and others tend to make about the economy. And also we need to keep in mind in the back of our head that these ridiculously low interest rate environments have really helped inflate the economy with really cheap debt. And that's a big part of the reason that I know you probably heard about the Fed and Jerome Powell's money printer go burr. Them printing money and having money at historically cheap rates to loan, that pushes the economy up, i.e. the stock market up. So we need to keep in mind what pushes the market up. It's not presidential policies, generally speaking. The Fed runs the U.S. economy more than any other entity. So keep that in mind when you're listening to rhetoric from any presidential candidate, because policy always trumps rhetoric. If you enjoyed this clip, be sure to leave a like, subscribe, and check out the full live version of the Wealth for 99 podcast, where we talk finance, economics, and public policy from a working class perspective. We'll see you there.